What's going on, everybody? Welcome to another video. By the grace of God, we are back with another one. Guys, if you are really struggling to find a simple strategy, or you're getting a little bit too confused with everything that's going on the chart, you've got too many lines, too many time frames, you don't know what to choose, what to pick, and you just want to do something that's simple and locked in and consistent, I'm literally going to give you a strategy that is just a 15-minute by itself. And we're going to look at this on USD JPY, but make sure, guys, that you always do your testing on everything that I'm telling you. Get a bunch of notes ready, get your paper, pens out, all of that good stuff, and get ready to really chew in on the strategy, take your notes, and get ready to test it. It's not to say that it can't work on other pairs, but this has worked really well for me on USD JPY. So just make sure that you got a good sense of the strategy and go and test it before you jump into the live markets. Because obviously, the way that I see the market is going to be different to the way you see the market, the way he or she sees the market. So you got to just make sure that it works for yourself and you're comfortable with it. So if that's all good, without further ado, let's get into it. All right, I'm going to keep myself locked in right at the bottom, but you guys are going to see just how easy strategies can be. And I really want you guys to know that these strategies, I'm just giving them to you just so you got something to sort of go off. Yes, of course they work. Yes, they're profitable, but I want you guys to know that your profitability is never going to be found in a strategy. So if you're going to be coming back to these videos trying to find the answer because the old one wasn't working, you got to just know that every single strategy is going to have downtimes. Every single strategy is going to have problems. You're going to have pain that you got to handle when it comes to the market. You know, no strategy is above that. So if you're taking a strategy and it's going really well, and okay, next week is a little bit slower, third week it's even slower, and fourth week was just downright crap, and then it's a little bit slower the week after, and it feels like it's not working, bro, it's not the strategy, it's you, my guy. You just need to continue pushing on. Get your risk management sorted. Make sure that you're not losing too much. Maybe even drop half risk if you need to. But just see the strategies out, guys. I don't want you to be coming back to this like you need to find some answers. You know, trust me, every single strategy is going to have their periods. You just need to hold fast and keep going. And I promise you it'll work for yourself. But, let's get into it. This is so simple. This strategy is beyond simple. It's the simplest strategy that's ever been built, okay? All you need to do is look at one concept, which is, which is pretty much this, okay? If you see price trading in a downtrend and you see a price makes a lower low like this, okay, breaks past this low, you need to take a note of the lower high that caused that. So basically the previous lower high right by here, make a note of it, okay? And if price makes a new lower low, what you're going to do is pretty much delete this old level and just transfer it, and you rinse and repeat until this level is broken. When this level is broken, and I want you guys to sort of inverse this, okay, for an uptrend. So basically what you're going to be looking at is something like this, okay? When you get this break or this break, your new trend defining point, okay, is down by here, meaning that price can come all the way down by here before it wants to ping off. Okay, this is literally the simplest thing in the world, and this is basically what you're going to be following for the whole strategy. You're going to basically just look at price where it is, you're going to look at the previous structure, and you're going to just look for that model. That's all you're going to do, is just look for this. Okay, look for that. Boom, you can find it there. Okay, you can literally find it here. You got boom, boom, and you got this level by there. Okay, that's it. Okay, now what you're going to be looking for, okay, basically you're going to just be taking trades, right, in a few places. Before we get into the entries, I just want you to get that down. Okay, if price breaks above like this, your new trend defining point is down by there, and the expectation is price is going to make a new higher high. Obviously, because this is the higher low that caused this is the low that caused that higher high. There's no change in the trend defining point. This is still it. When you get something like this, boom, your new trend defining point is going to be by there. When you get something like this, the new trend defining point is going to be down by there until the level gets broken. You rinse and repeat. Okay, if you get a situation where price goes and breaks above like this, you say, okay, no problem, little bit of manipulation, we take that level, and just follow the exact same process. What are we expecting? Price to come down by here before shooting off. Does it always mean there's going to always come back by there? No, it doesn't. What it also means is that it could do something like this. Okay, you could also get something like this. Okay, we'll get onto that in a little bit, but that's basically the first, that's basically the first thing that you really got to know. We are basically going to assume that our downtrend is still intact, okay, until that level gets broken. We are going to basically assume that our uptrend is intact until that level gets broken. Okay, that is it to start off with. It's so simple. So simple, and that's it. And you can watch this, right? And we're going to go through loads and loads of examples. Okay, it's going to be a bit annoying because look at the replay button. That's going to be quite frustrating, so we're probably going to try and do most of our stuff by here, but yeah, that's it. Okay, now notice how I said here, okay, if we are in, if we see this and this level hasn't broken, we're still in a downtrend, in an uptrend. And if we see this, and so long as this level has not broken, we're still in the downtrend, right? What we've just explained when I did this, okay, is your overall structure, okay? And this is going to be your current structure, okay, where basically you're going to be looking at price currently. So let's just delete everything, and we're going to put this into a very nice illustration for you. Let's say you see this, okay? Or better yet, let's say, actually, let's keep that there. Oops-a-daisy. Let's keep that, okay? And let's draw something underneath it, something like this. Okay, if you wake up in the morning and you are, for example, by there, or you are by here, step one, you want to mark out that overall level. You want to mark out that trend defining point. That is the first thing that you want to do, okay? The second thing that you want to do is look at where is price currently. And what do? You look for that exact same model. What can you see? That break above by there. You can see price broke above. This is what you do. So you're going to basically make notes of two things. Number one, your overall structure, okay? And then number two, your current structure. Okay, so this is going to be your overall. Okay, this is going to be your overall, and then this is going to be your current. Does that make sense? And you're basically going to work, you're basically going to not so much juggle, but you're going to be doing these both at the same time. Because if something like this happens, right, the basic idea of your strategy was going to, the strategy is going to revolve around this. This is going to be one of the place we're taking our trades, okay? But obviously, the current structure is showing that it's in a downtrend. So what we're going to basically do is plan for two opportunities. We're going to plan for the buy, and we're also going to plan for the sell, okay? Does that make sense? So we're going to take two positions. One's going to lose, one's going to win, or they're both going to lose. But that's absolutely okay. You are not going to win every single trade. But the truth is, this is a really sound approach, and you guys are going to find this so simple. So what you're basically going to be doing is, okay, if I'm going to just draw randomly, okay, if I'm just going to draw randomly, like what price is going to be doing, so like what you're going to be looking at, okay, what we're going to basically be doing at any point, we're going to be assessing when has the sort of trend on the 15-minute changed, okay, and when are we going to, how are we going to basically take advantage of it? How are we going to basically, at any point that I've been drawing, if we're, assuming that we're not looking at anything to the right, if we're by here, what's going to be the plan? If we're by here, what's going to be the plan? If we're by here, what's going to be the plan? And what we're basically doing is taking the information from the 15-minute. If we see something like this, then we're saying to ourselves, well, we're bullish, right? So what we're going to basically be doing is taking advantage of what happens in an uptrend, okay? And what happens in an uptrend? Price makes higher highs and higher lows. Price makes higher highs and higher lows. You got to get that down. In a downtrend, price makes lower lows and lower highs. So we are going to expect lower highs to be made, and we're going to expect lower lows to be made. In an uptrend, we're going to expect higher lows to be made and higher highs to be made. In an uptrend, we're always going to expect higher highs to be broken. These higher highs to be broken. And obviously in a downtrend, we're going to also expect lower highs to be made and then these lower lows to be broken. Okay, that's going to be the sort of general rule. Now, what's going to happen if we see something like this? Okay. What's going to happen if we see something like this, a lower high happening? Okay, well, guess what we can do? We could probably have, a potential planned trade down by here. And if we want to, we can take our entry. We're going to, by there, we're basically going to be assessing where is price currently, but it's going to be in that sort of, I don't know how to word it, kind of like that twofold structure theory concept. I don't know. Basically, you've got this is basically what it's going to be like, okay? Okay, so you are going to have your overall structure that you're going to be sort of focusing on, which is basically where you're going to see price be doing like this. And then you're going to be focusing on the current structure, okay, where you're looking at price by here and identifying immediately. That's why I say current. Where is price currently? Okay, so we have our overall and our current. And this is how I trade, not specifically the strategy, but that concept is how I trade all the time. Okay, now let's go on to entries. Okay, how are we going to enter the market? We're going to enter the market in three ways. Okay, we are going to enter at our retest level. And by the way, guys, I hope you're taking notes because I don't have any structure to this. I'm just throwing it all out there, and I want you guys to be taking notes. We're also going to have some rules as well. Okay, so we're going to be taking trades at our retest, expecting price to do this. We are going to be taking trades at our trend defining point. Okay, we are also going to be taking trades potentially as higher lows. Okay, I know that's lining up with the retest, but just ignore the retest. We're going to be taking trades assuming those higher lows. Okay, and what we're also going to be doing is taking what we call double tops and double bottoms. Okay, actually no, forget that, just ignore that, because that's to do with other time frames and stuff. Okay, so yeah, what we're also going to be doing is taking trades like this. If we see price has shifted like this, you see has broken that trend defining point, we're going to take a retest by there. Okay, we're going to follow that exact same thing. Let's say, for example, we took a trade by here, or let's say, for example, let's just say we did this. Okay, we see a downtrend and we see prices come by here, retest, amazing. Okay, but it does something like this. Okay, it comes down and it breaks above. Okay, takes us out for a loss. We've still got our trend defining point to trade. We're going to take a trade by there. Okay, let's say, for example, we take a loss by here. Okay, and let's say we don't get an entry and price breaks above, we can take a retest by here. Okay, and we can also take a trend defining point double bottom. Okay, I know there's a bad double bottom. Okay, it looks like a liquidity grab, but you get the gist. But in the midst of this, guys, there's also going to be some entries we're going to take, which is going to look like this. Okay, can you see how that's a bad drawing? Let me do something like this. Can you see how we've got this structure? Okay, I want you to take a note of exactly what I've drawn you. This is literally what I have in my trading strategy. Hang on. Okay, this model particularly. Okay, so what this is showing you, okay, it's showing you your overall, okay, your overall retest, your overall trend defining point, and it's showing you your current retest and your current trend defining point. Okay, so we're going to go into the details with the actual chart work in a minute, how this looks like. But what this basically is like, let's say, for example, you don't get your entry, price can and it will hit this level and it will trade off. Okay, it can and it will also, you know, hit this level and move off. If it wants to break below, we can take our trade by there. Okay, and if it breaks, that gets broken as well, we can take this trade by here. So you can see some ways we can, some people, you know, I did a video on this actually calling it internal and external structure. This is your internal. Okay, all of this inside. Okay, this by here is your external. It's probably an easier way to define it rather than current and overall, but you get the gist. Okay, this is basically what we're going to be following. Okay, so looking at rules, okay, when we're looking at rules, we are always going to be taking our overall trend defining point trades. Okay, and we're always going to, when it comes to the current structure, we're not, if we see something like this, okay, if we're in current structure and we see this, okay, right, we see this level by here, but currently, you know, we see this particular structure forming, ignore all of that and just follow price currently. Similarly, if we see this, okay, and for example, we see something like that, we ignore all that and just focus on where price is currently. Okay, so we're just focusing on that current structure. Oof. Okay, also another thing to mention, okay, if at any point you have seen a trade, let's say you, for example, you scouted this, and let's say you got two opportunities like this, okay, and let's say you come to the morning and you see this, okay, you can see price has already moved off from your planned trade. If price is coming back to this level, don't take it. Okay, if price has come to your retest level and pushed off and you haven't entered, don't enter it. Just assume it as invalidated. Like, let's say you wake up in the morning and you see something like this, okay, where price has already tapped into this key level and it's moved off, and you wake up and say, oh, let me go and set my order because technically the trade is still active. Yeah, it hit its retest, I can just jump back in. No, don't do it. Just don't do it. Okay. a lot of talking. Let's just get into the actual strategy itself. Okay, this is basically what we're going to be doing. I'm just going to go back from a period of time. Okay, obviously when price is consolidating, we're going to just ignore all that. I want to go back a decent amount. Now, obviously, there's parts of the strategy which you guys can. I'm going to close my eyes now, guys, and I don't want to look at the screen. Okay, there's parts of this strategy that you can obviously tweak and stuff when it comes to like profit targets and etc, etc. Oh my goodness me, this is not looking pretty. Whoa, 1 second, let me move my laptop. It's on the floor. Oh bro, how do I get rid of this replay in the middle? That's so annoying, bro. Why did they add that in? Why did they add that in? You probably have to like you probably have to add, like, you probably have to pay more or something. But yo, come on man, they're doing us dirty. Okay, now what we're going to basically be doing, sometimes this can get like really it can get really annoying, but you want to basically, step one is to find your overall structure, your overall trend defining point. So you basically want to just look down. Before we do that, another rule. Let's just look at this very quickly because I want to show you something. Some people may look at this and be like, yo, we got a lower high or a higher low. One candle is never enough. You see that bullish candle? That's never ever a pullback. Okay, that is oops Daisy, what am I doing? That is never ever ever a pullback. You see that green candle? Never. Sometimes you might get one big candle which kind of like overtakes all these candles, sure, but you kind of want to see, you know, for example, if you saw this pullback and this was just one candle, you know, something like this, that was just one candle, what you basically want to see is at least 2 bearish candles coming down. If you just see one candle going up and another candle going down, bro, that ain't nothing. Like, this is nothing. I want you to just ignore that green candle like you just see in this. Okay, so what we're doing is we're looking for the trend defining point. It's so easy. What you want to do is kind of zoom out and you want to just find a glaringly obvious higher high, like by there. Okay, you don't need to do anything crazy. Just look to yourself and say, okay, where is the previous higher high? And when it comes to higher highs and higher lows, is another tip. Okay, what we're going to basically be doing, we only ever see prices doing this as making a higher high when a body has closed beyond the wicks. Can you see that there? Can you see how these wicks have created this big level? Okay, we're going to get into the key levels in a second. Can you see that? You see how price has broken above by there? That's how you can actually confirm this. If you don't have that, okay, even if price is doing this, okay, let me show you. If you have something like this, let's say there's a big massive wick by here. Okay, this is a big old wick and this is your key level, okay? And you see price doing this. I promise you, fine, maybe in a second you can start to mark this out as current structure, but literally you can see how these are all higher highs, etc, etc. Because you have not got a body close above the wick by there, or the wicks, then what I want you to see this as, genuinely, until you get that body close, is just see it as this. You just see no break. If you get that break above, then okay, fine. You can now mark this as your current trend defining point. This is your overall, bang. And then you could, if you want to, plan your trade by there. Happy days. Okay? So something just to, you know, bear in mind. So what we're doing is, we can see that we got that higher high right by here. We can see that, yeah? Now what we're going to do is basically see, was there a previous higher high? We can see, nope, 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 this was it. So what we do is, we go right by here, and we go, where was the lowest higher low that caused that higher high? It's right by here, isn't it? So what you basically do is you look to the left. I'm going to try and do it a little bit easier so you can see it on the right, okay? What you do is draw that in. Okay, go to the left, see if there's any wicks. If there's wicks, add them in, keep on going, boom, no. So that's it. This is going to be your overall trend defining point, although price is just in a big old consolidation. We'll get into that in a moment. Okay, but what we're going to do is basically follow the price action. Okay, you could have taken a stonking trade by there, bruv. You know, but anyways, keep it pushing. This is just like a big old candle. Sometimes, I guess, I know we said we wouldn't look into higher time frames, but sometimes, bro, you need to be able to just see when price is consolidating. Don't be taking trends in the middle of a consolidation, okay? So, there we go. But when you see this breakout of a consolidation, just expect there is going to be a potential major breakout, right? Like price is potentially going to just smash to the upside. Okay? Well, it's not, but it's doing its thing. Do we have a break above yet? This is probably like a really bad example to show. I shouldn't probably show the strategy in not particularly great conditions. Okay? Let's just go to the 1 hour just so I can zoom this up a little bit. Sorry, speed this up a little bit. Okay, here's also a tip. You might want to try the strategy out when you can see a currency pair that's trending nicely. Okay, let's just see this. Are we doing good? Another rule. If you see any of this big wacky stuff, like a big massive candle or a big massive wick, ignore them. Just ignore them. Just do it. You just do your job as normal. Okay. And you know how we said? Do you know how we said? You know that a key level or a high low can't be made if there's one candle and then just another big candle that comes next to it. That's why I said you got to wait for those two candles. Sometimes you will get something like this, okay, and then you get one candle, another candle, price is sort of coming back up, and you're just getting the idea that it's been validated now. Then once you get that validation, you know, price is respecting this level or doing whatever, then sure, even though it's one candle, you can get that, okay? All right then, I'm just trying to wait for see when price is sort of clearly trending. Well, there we go. Now price is looking like it's okay. And what can we see? Very simply, right? We're looking at current structure, okay? This is quite funny because if we take this, if we just go into the strategy now, we're going to go into the strategy and just get into the nitty-gritty, okay? If we can just see that price is broken below by here, we got this there, price has come down, what we literally see is price is just done this, okay? Okay? And then as it comes up by here, that's this break above. What you want to do is this, okay? This is going to like taking your trades now, right? Let's just go back. Let's say price broke above this. What we're going to do is mark out our levels. Boom. We got our lower low. Boom. Here's our trend defining point. Boom. Price has come in by here. But let me just go into drawing the key levels, okay? You want to make sure that the level that you're drawing, the swing high or low, is a genuine level. You don't want to see that one candle nonsense, okay? So what you do is go from the wick to the bodies, check to the left. Are there any bodies by here? Could you add these in? If you wanted to, sure, you can do that. But you want to basically add in if there's any wicks. If there's no wicks and you see prices just kind of bodily come in by here, extend it down a little bit if you want. This is nice. This is a nice level. Let's go into use this as another example how to draw key levels, okay? You go by here. Wick to the body, okay? You can see are there any wicks to the left? Do any wicks tap in by here? No, they don't. If you see this wick and you kind of want to add it in, sure, no problem. If you're adding in these wicks, it's really good for you because you will be able to get a really accurate key level, okay? I'm going to go into it very quickly, but I don't want to spend too much time on it because I've said this in loads of videos. But drawing your key levels is really important, like so. You want to know when it starts, okay? And you want to know when it ends, right? Meaning that you want to be able to get a really accurate sort of level in which where price taps into it, it pings off straight away, and you want to get an accurate level in which you want to know when has the level been invalidated. You can't keep on seeing price pushing and pushing and saying it's a retest, it's a retest, it's a retest. No, the level has to begin somewhere and it has to end somewhere. And that's exactly what we're doing. It's going to begin somewhere and it's going to end somewhere. This is where we want to see price tap in and push off. This is where if price closes below this level, the retest is invalidated. Okay, I'm just telling you what works for me. I'm just telling you what works for me, okay? Now, if we draw on this and we see that price, okay, we draw this, we can see the price is respecting. Cool, it's respecting it. If you see these wicks and they're respecting it, cool, they're respecting it. Now, how are you going to set a trade? When price is in this level, you're going to set your stop loss, maybe something like this, okay? Your stop order entry is going to be by here, and you're basically going to want to, if any wicks come lower, I want you to add, you know, add your level like so and put the stop loss below the level. Ideally, if you can, you want to put it behind some structure like here. You basically, this is your key level, okay? Right? You want to ideally put it behind some structure like this, but this is a massive stop loss. If you see, yo, it's too big. If you think it's too big, this is okay. Okay, well, your key level was actually like by here, wasn't it? Okay, so your key level would have been something like that. Your stop loss would have been something like this. Here we go, lovely trade. You want to get good risk to reward. Don't be too tight. Don't be too big. Just be decent. Don't be too big. Don't be too tight. Give it some nice room and just let it breathe, brother. Okay? Just let it breathe. Okay? But look what's happened. Here's what you can also do as well. Look how price, okay, broke above by here. You can see how it broke above, right? So what we had was the break above that trend defining point, right? Where price broke above by here. This was this. And it went and did this. Right? It broke above. You see how it broke above? It came down by here. Took the entry. What you can do if you're really cheeky, okay, is say we're going to wait for price to come back and we're going to take a double top like this. Okay, you can see how price, you know, broke above those wicks. Amazing, right? You can see that we got this potential double top by here. You can be really cheeky like that, right? Extend it like this, and you could sort of readjust your trade. And instead of going for something like a 1 to 2, look at that, bro. You could have got a 1 to 4. Okay, so let's just do that. Let's just assume that we took a, let's just put our thingy in right here. Okay, this is it. I don't even really, obviously this is tested, right? I know the strategy works, but I don't even really need to go through all the testing to prove that something works. If something has a genuine sound process and you have good risk to reward, it's more than likely going to work out. Okay, so we're going to say, let's say we took a half-hour loss. Okay, half-hour loss. Okay, and let's say we took a 4-hour win. Okay, lovely jubbly, right? Now, the way you take your profits can be up to you. You can do a trading stop if you want to, right? Maybe you want to wait for a trend defining point break. Maybe you want to wait for a break below by here, something like that. Maybe you want to go for a 1 to 2, 1 to 3. Me personally, if I can get a good risk to reward, I'm going to go for 1 to 4. If I can see I could get a good trade, that's a brilliant trade, right? Really, really clean. That's awesome. Okay, that's what I'm going to basically be doing. Okay, let's keep it pushing, right? Another thing, if you're going to be trading from, say, for example, I don't know, 1 p.m. GMT to 2 p.m. or let's say 7 a.m. GMT to like 1 p.m. GMT, then backtest that time. Okay, don't backtest every flipping day and every single time, because you're not going to be trading then, are you? Okay, just trying to get around this flipping replay thing. Okay, cool. So mark out your levels. You can see by here there's a wick up there, right? You always want to sort of be aware of that. Add those wicks in. Okay, you can see by here, you add that wick in. If that looks a bit unreasonable for you, you can adjust it, but you want to add as many wicks as you can. You've got your trend defining point level there. Yeah, you can see you got a retracement. Price is sort of pushed up. What we're looking at by here, we look by there. I know it's a bit hard to see with the replay fat thing in the middle, but bear with me, right? We've got this. Okay, what we have on the screen by here is basically price doing this, and now it's sort of trending down. All right, so right, what can we see? Has price tapped into this retest level yet? Nope. So it's a I guess you could call it a virgin retest level. Maybe it's not an appropriate way to word it, but yeah, it's clean. No one's touched it yet. Sounds mad. Hasn't been tapped into. And by the way, if you just saw, for example, let's say, for example, I don't know, let's just look to the right and assume this price action isn't there. Let's say you had this break above like this, and by here was a wick, and then price came and tapped into this big old push. That it looks like a nice lolly. That in itself is a retest. Even though it hasn't pushed up and come back down, that tap in there is a retest, okay? And that means it would be invalidated if you're looking for price to come back, potentially take that trade. But what you can also see, okay, what you can also see is that price, right, is doing its thing. But as you can see, it's pushed off. So you're going to forget about it, okay? But what you can see in the current structure, you can see you've got a trend defining point by there, okay? Right, take your sell like that. Ideally, you maybe want to put it behind something like this, but this is good enough for you behind this structure. There's no point putting it up by there, because this is the current trend defining point. By the way, if the stop loss looks really, don't do a stop loss like this. Don't be a donor. Make it decent, not too big, not too small, just something decent. Yeah, nice, like this. Yeah, so this is the trend defining point. So there's no point putting your stop loss up by there, because if price breaks above by here anyway, the current trend has shifted. Okay. Right, look what we got. Okay, we took a loss. Right, we took a loss, okay, on this particular entry, and then we got manipulated out by here. What I would recommend, for me personally, I would say 2 trades. Okay, now hang on, notice, oh my gosh, my housemates are going wild. Bear with me. So look, notice how I said you want to put your stop loss below structures for exactly for this reason. I don't know if the trade's going to win, but you can see, right? So this would be your entry, right? Your entry would be up by here, okay? If you really wanted to, you can do what we did before, and you can take that better loss. Let's say we took a half-hour loss, meaning that we went by here, okay? We roughly, or let's call it 0.6. We would have closed our trade out as price came to this level, okay? So let's say we took minus 0.6. We're doing to minus because it is 0.6. I'm going to put an X, comma there so people know. Alright. So, see what we can get. This looks... Let's go for 1 to 3. Something's telling me to do 1 to 3. You know, you can chop and change. Okay. Oof, that would have been a tough one. Okay, tough day. Right? It is what it is. Right? So if you wanted to maybe not do that, and you wanted to maybe go for 3 trades a day, let's see how he would have acted. You would have had a nice win by there. Okay? If you stuck fast to the overall retest level. Okay? You would have been able to, let's see what you can get. Okay? Would you be able to get 1 to 3? I'm gonna just do this for just do this for argument's sake. See what happened? Nah, price would have bummed you. Price would have bummed you anyway, so it's alright. Moving on. Okay? Let's save that. Let's just do a bunch more. Okay, so this is basically just to give you an idea as what to do. Okay? So we got bummed that day. Let's keep on pushing. Let's go back to 6 a.m. GMT. Oh, hang on. There we go. Okie dokie. Price. So current structure is still intact. That's down by here. I'm going to just mark it with that line. Okay. Just drawing some stuff. Okay. Price breaks above. You've got this by here. Price is looking all the way minging. Okay. If you see all this big, massive stuff, bro, just take maybe this level. Okay. And leave it as it is. Okay. For me, it just looks like a consolidation. Okay. And if price is consolidating, again, what we're going to do, put the stop loss below that level. If that looks a bit massive, you can kind of go by here. But for me personally, I'm going to do this, right? Do that. Okay? And maybe go for, I don't want to go for 1 to 2. Nah, do you know what? Let's do it, baby. Something like this will be okay. Okay? What happened by there? Let's have a look. You took that trade, okay? You took another loss. Watch this. Okay, what happened? You got this current trend defining point by here, right by there. You can see how price is broken above. This is why it's really important to stay disciplined. Look, what happened? Okay, what you're going to be doing, because this is your trend defining point level. Forget that previous retest that we were planning our trade from. Focus on this. Oh, bro, it's actually so annoying. Okay. No break above. Price broke lower. Now look at this. This is a money trade. Oops daisy. This is a good one. And you can see how it's still following that process. Look at that. Stop loss above by there. This is a lovely, lovely jubbly one. Lovely jubbly. What would you have been able to take out of this one? You would have been able to take out 1 to 3. That's a nice one, eh? There we go. Tagging that on. And the reason why, guys, I'm saying look what you could get is just to kind of show you, do you want to go for 1 to 2? Do you want to go for 1 to 3? Are you noticing things? Maybe you want to just sort of follow the structure. What you could have also done, you could have also been so naughty, right? You could have been cheeky again and got in some stinky old trade there. Okay, I was going to say, but I didn't really want to kind of put too much in your head, right? But basically what happened there in this entry, it was this, bro. Look, it went like this. Okay, right? And then you took the double top by there. That's it. You got to just break it down. Everything I told you with the wicks and the bodies, etc., and the breaks, yada yada. You know, the levels are only broken like this when you see the wick. Okay, forget it looking like this. You just want to see the body close. Price is only broken by there when you get the body close. It's only broken, you know, by here when you get the body close. Okay, no wicks. Right? Let's save this. Okay. 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 All right. Trend defining point right by here. Okay. But what can we see? Currently price has basically done this. It's gone down here. Oopsie. Look at, oh, before we do that, oh dude, I'm like really sorry guys, this flipping replay thing is in the middle. It's actually like so annoying, dude. Like I need to go and actually look into it. Look what happened. Price tapped in, pushed off. You ignore this, okay? You ignore this level, okay? Why? Because look, price tapped in, pushed off. But what happened by here? Look at that, beautiful. You got push, a little pullback, a little retracement, and a break above. This is exactly what you got. You got this, look. You got a little bullish, high, low. Price breaking above. This is going to be the trade of the century, bro. Look at this. This is the juicy one. This is like the juiciest of juicies, bro. Right? Stop loss below that level. Come on now. What is this? Is like, and then what you could also do is be ultra cheeky. Look how cheeky. Look how cheeky. Look how cheeky we're going to be. It's going to tap in. Yeah. Excuse you. Okay. So this is why stop orders are so awesome. Oh, you can't even check, but you probably would have got tapped in. Okay, let's just say we got tapped in, right? That's actually so funny. But the reason why stop orders are so awesome is that you're waiting for price to tap into that level and then set the order, because if something like this happens, you don't get triggered, bam, you can save yourself from a loss. Okay, but what happened here? Let's just delete everything again. Let's just save our little score sheet. Okay, look at this. So we're assuming we took a loss by there, stop loss above by here. We can go ahead and take that nice juicy cheeky trade. Price going to tap in. Oh my goodness me, that is the best thing you could look at. Look how price taps in, and this is going to be, it's either going to smash to like 1 to 3 now, or it's going to just reverse on you, bro. One of the two. Look at that. That is like, honestly, as a trader, for me, that is like mwah, chef kiss, when it just taps in and goes, bruv. It's literally like you are literally moving in on like a high-speed bullet train, and you just go what, boom, and it just takes you. You see this, bro? You see that? That's just like, yeah. I was gonna say heavenly, you know. That's just a gift from the Lord to you, you know. Let's keep it pushing, okay? Let's keep it pushing. I'll do a few more because I don't want to make these videos too long. Okay. Oh my goodness me, that's a bloody tank. Oh, that's Trump. That's Trump doing his business, doing his business things. Trump doing what Trump does best. Also, you might want to avoid like NFP and stuff. So we'll just avoid NFP day. I think that's NFP day. We'll just avoid that. Okay. Lovely, lovely, lovely. Okay, what can we see? Right. Price doing a big old hoo-ha. If price is doing a big old hoo-ha like this, just maybe wait for it to get clearer, because right now it's just doing a whole bunch of madness. Okay. Well, actually, before we do that, let's just get back to our process. Right, where's the current and overall? Okay, we can clearly see price is broken above all these levels. Here is your overall trend defining point. If you see a big old gap, just pretend there's flipping candles there going down like this. Just do that. There you go. Nice. Now there's no more gap. Price broke below this trend defining point, broke above by here, broke below by there, broke above that trend defining point, making this the trend defining point. Okay, because as you can see, it broke below by here, broke above there. This is your trend defining, well actually this would be your overall trend defining point by here. Yoink. This would be your current. So what you can do is basically plan an entry by there, plan a sell by here, this retest or this level 2, whichever the one. Yo, what did I just say at the retest? Damn. So what you would have done here, okay, that was your entry. You heard me say at the retest, you guys heard me say it. Okay, put your stop loss in a decent place. You would have taken probably a buy by here. You would have set this for 1 to 3. Okay, you would have set this buy by there. That would have been a loss, okay, because you're planning this trend defining point, because this level got broken by there. This would have been 1 to okay, just call it 1 to 3 and be conservative. And yeah, and to be fair, guys, that's pretty much it. You know, you just follow that model. Just follow that model that I told you, the illustrations, and it's there. Look how simple and easy it is. Go and test it on USD JPY. Go and test it on other pairs. But if you have any questions, any tips you want, just email me. It's in the about section of my channel. You can take screenshots of your testing, but go and use it. If you want me to go into maybe more detail into this strategy, I definitely can, but I don't want to go too much for you guys. The purpose of these videos was not only to sort of be more centralized in the approach on the sort of the uploading, but also to kind of let it be bite-sized rather than just like, you know, so much content. But yeah, any questions, just email me. But you can see the results. Let's just do the results quickly. I mean, come on. 4, 3, 7, 10, 13. We had 1, 2, 3. Oh, hang on. 1, 2, 3, 4R, 4.5, 5.1, take away 13, so 8R, and it wasn't even that long. So you know it's well, I mean, it is profitable. But the reason I wanted to hold myself is that if you're going to test a strategy, guys, don't just test like 6 or 7 trades and be like, yeah, it works. Test a large number of trades. The reason I'm making it short is for the reason I just explained. I don't want to sort of bog you down too much. I've given you everything. You just need to go and test it. Any questions, email me. I respond to you probably the same day. Okay? So yeah, email me any questions. Praise the Lord. Praise Jesus. Praise the Father. Praise the Holy Spirit. Guys, I gotta just say, God is so good. You know, God is so good. I'm so thankful that He exists. I'm so thankful that He's Jesus Christ. And I'm so thankful, guys, that you are here to experience this joy with me. You know, the channel's growing. You guys are getting good content. I really want you to digest this strategy. And any questions, like I said, please email me. It's so simple. It's so easy. And you see the power of just a simple thought process. No high time frame, no questions, just boom. And let me tell you something. The only thing that's going to reward you in the market is consistency. Take one approach, test it consistently, and look at the results. If it works, apply it consistently. Your success is going to be in your ability to overcome those temptations to switch your strategy, those temptations to do something different, those temptations to tweak. Just do what the 5% do, okay, and what the 95% don't do, right? Which is go through that pain of that discipline. No matter what happens, no matter what's coming at you, you just trade that plan. But yeah, that's it for the video. Like, comment, subscribe, all that good stuff. Thank you so much for watching, guys. Any questions, like I said, please email me. It's in the about section of my channel. But for now, have an amazing rest of your week. Take care. Bye-bye for now.